This conference will now be recorded.
So I'd ask you people to solve this second exercise, second example, and det 2, this example, and det 3. So did you people try? So the first one we had already solved. Let's solve the second one. So is equal to PMT, date is 12%, comma, N per is 4 years, comma, PV is 1 lakh, comma, I wanted to future values.
Ma'am, we
Yeah,
can't see your screen.
sorry, 1 second. I think I did not share the screen yet. Now, now is it visible?
Yes, ma'am.
Okay. So first sum we had solved. So let's solve the second one. So second one, create a debt amortization schedule for the following loan. So I'll give is equal to PMT, open the parenthesis, my rate. I'm just selecting my cell. Rate is 12%. N per is 4 years. Present value is 1 lakh rupees loan. Future value is 0. And I wanted to check for end of the period. Okay. So here the amount is, so EAI is divided by 12. And here it should be multiplied by 12. So here I'm getting the EAI. So annually, if I'm paying the installment, means I have to divide the value, that is rate, by, I need to divide it by 12, and the N per, I have to multiply it by 12. So here I'll come, beginning of loan is 1 lakh rupees. EAI will be this value. So before I take this value, so it is in negative value, so I cannot use this for further calculation. So what I will do is I'll just add minus sign at the beginning so that I'll get the positive value. So equals, I'll take the EAI, interest equals 1 lakh into 12% divided by 12. Okay. Then EAI. So principal repaid will be EAI minus interest. So end loan, end of the first year, 1 lakh minus 16,000. So 9 lakh 83,000. So here the beginning of the period will be last year's closing balance. So I'll take my cursor here, just drag the values, that is do the fill series, and EAI is going to remain the same for throughout the 4 years. So I'm going to select this interest. So I'll come here. So here I have taken, so 1 lakh. So let's see. So here principal repaid also, I'll just come and drag, and here end of loan also I will drag. So something is going wrong over here. 1 second. Let's see. Equals. I'm going to drag this EAI into 12% divided by 12. So principal repaid will be EAI minus the investment minus EAI. One second, guys. Okay, the actual value was correct. Then it was not like I should not divide it or I should multiply it. So here 1 lakh EAI interest into 12% principal repaid EAI minus end loan will be 1 lakh minus principal repaid. So first I need to calculate, then here I'll take the value of end loan of the previous year. I will drag it. So here EAI is going to remain the same throughout the years. So interest will be on this. I'm going to pay 12%. Oh, sorry. Equals this amount into 12%. And drag it. EAI minus interest. I'm going to drag it. So here equals minus principal repaid. So are you getting this value? Guys, last class I told you people to try with this. So did you people try? Did you got the same answer? Okay, let's go to the next one. So here also it is equal annual installment is equal to PMT, open the parenthesis, rate, comma, N per, comma, 0 and 0, end of the period, enter. So here I will just put minus sign before the beginning of the loan, 40,000 EAI. I'm going to take this value, interest equals 40,000 into 9%. So principal repaid EAI minus interest, end loan will be 40,000 minus principal repaid. So here the same way only I'm going to take the values, equals end loan and get it here. So EAI is going to remain the same throughout all the 5 years. So interest on this I'm going to pay 9%. So here principal repaid, end loan. So the second sum, if you people have not tried, please finish this. I'll give you 5 minutes of time. You want me to explain it once again? Once I'll explain you. If you have understood, then do the sum. solve it.
Ma'am,
Yes, ma'am.
I have a doubt regarding our attendance.
Attendance.
Yes, ma'am. Ma'am,
Yes,
where
ma'am.
can you
Tell.
check how many classes we have missed in total?
So it is in the go to meeting. I have to download the attendance list. Once I have done it, so there will be
Mm-hmm.
rooms and past. So past it will record the attendance as well as the video also. So there I have to download it in the Excel and it will show. It will not show all together. But today, whether you people have attended the class, how many minutes you have attended, that it will show. So based on it, I am going to mark the attendance in our register.
Okay, ma'am. So, I just want to know where I can check mine. That's why I asked. Thank you, ma'am. Will you be sharing that list?
Yeah, we'll share you once before we finish, wind up with our sessions. We will share it. Means the before
I
the
just want to
last day,
know if it's shortage
not
or
today.
something.
Before
Okay, ma'am.
the last day of your whole entire this one training.
Okay, ma'am.
May I know your good name? I'll just check out and let you know about it.
Yes, ma'am. Thank you.
Okay, trying with this, guys. Guys, tomorrow will be a holiday. Is it mentioned to you?
No, ma'am.
Okay, tomorrow there will be no class on account of Independence Day.
Okay, ma'am. Ma'am, how many days are left for this course to like complete?
So it is like, so tomorrow is an holiday. So 3 more days in this week, and next week I don't know. Probably 25th you will be having the class or what, because we are having leave. So it is off for us. So if we are not working on 25th, 29th will be the last.
Okay, ma'am. And what about the assignment, ma'am?
Assignment means you will be having the online exams. Multiple choice will be there. The link will be shared to you. So it will be including Excel and financial modeling, both. Based on both the things, you'll be having the questions. It is multiple choice.
Okay, so like we have to solve the questions and like pick the right
Yes,
option.
yes. So
Okay.
they will give you the permission to use Excel or what. Excel, they will give you the permission to use, so that using the Excel you can solve it and you can give the right answer. So the answers will be given, like four answers will be given. You have to choose the right answer.
Okay, ma'am. So when will this test happen? Like
As
this
I
month
told,
or next month?
yeah, this month only.
Oh,
So if you are not working on 25th, then it will be on 29th. If we are working on 25th, then it will be on 28th. This month end.
oh, okay, ma'am. Thank you, ma'am.
Yeah, ma'am.
And ma'am, will the marks affect the certificate also? Like, will it be there in the
Yes,
certificate?
yes, yes. Grading will be mentioned.
Oh, okay, ma'am.
Ma'am, the required percentage of attendance is 80%, right?
Yeah, yeah.
Okay, ma'am.
So done with this sum. So let's go to the next one. So here the loan amount is 12 lakh, which is compounded monthly. I need to calculate the EMI, that is equal to PMT, open the parenthesis. Rate is 12%. So divided by 12, comma, N per multiplied by 12, comma, loan 0, 0, end of the period. So here I'll just make this as minus. So beginning of the loan will be 12 lakh EMI. So this is EMI interest. So interest will be on 12 lakh into 12% divided by 12. Principal repaid EMI minus interest end loan is equal to 12 lakh minus. So this end loan will become the beginning of the period. So EMI is going to remain same. So I'm going to do the fill series. I'll just take my cursor here, double click. So I'll come here, double click. So should not get the wrong answers. So I'm just divided by 12. So principal repaid EMI minus interest. So I'll just come here. So let's see. At the end of the period, it should be 0. Got it? You want me to show it once again? Guys, have you people understood? You want me to show it once again? If you people have understood, please solve this sum. Then we'll start with financial statements. Guys, have you people downloaded the file what I have shared you in the group?
Yes, ma'am.
Okay. Did you understood how to calculate the debt amortization? Okay, hopefully you people have solved this. So let's start with our income statements. So I have shared you the explanation about what is an income statement, what are the components of it. So everything I have shared, so you can go through because there are some non-accounting students also they told. So that is why I have shared it. So hopefully it will be helpful for you guys. So if you are still having any doubts, you can solve it. Okay, you can get it clarified. Okay. So before we start with income statements, so do you people have any idea about what is financial statement is? What is a financial statement? So it is a statement of collection of which shows the collection of summary level reports. Level reports about an organization's financial results. So have you ever heard about financial statements, financial results, financial position and cash flow. So financial statement which shows the collection of summary level reports. So when I have to know about a company or an organization, so I'm going to go through about the financial statements, okay, which shows the organization financial results, like is the business or an organization is making profit or the business is in the loss. It is going to show the financial position of that business and the cash flow, okay. So this also financial statement also includes income statement, balance sheet, and statement of cash flow. Okay. So financial statement means it also includes the income statements, balance sheet, and statement of cash flow. So what is this income statement is? Income statement. So what is this income statement? So income statements talks about all the incomes and expenses, where I can tell incomings or outgoings of cash, money of a company. So income statement means it talks about the income and expenses, where I can tell that incomings and outgoings of money in a company, okay. So it also talks about the company's returns on investment. So if they have made any investments or anything, what is the IRR that are going to be they are going to get, and the risk, the financial flexibilities and operating capabilities of a company. So income statements are going to show what all returns on investment, then risk, financial flexibilities, operating capabilities. So income statement is going to show all the other things which includes the incomings and outgoings of the things. So do you know the income statement format, how it is followed with? So I'm not going so detailedly because I have shared you the notes. You people go through the notes, okay? Because explanation might take a lot of time. Still, we have to solve with the income statement, balance sheets, and then we have to solve with the case studies also. Okay, so that is why I'm not going in detailedly, where I'm just taking the brief of the income statement. So now when I'm talking about the income statements, that includes the purchase, where I'm purchasing the raw materials or anything, and when the sales is happening. So when the sales is happening, the revenue is going to take place. So based on which I'm going to calculate the COGS, that is cost of goods sold. Okay. So sales minus COGS, I'm going to get the gross profit. So then I am going to calculate the operational expenses. So it can be anything, like if I'm paying the amount towards the salaries, if I'm paying the amount towards my expenses like telephone expenses and other expenses and all. So on which EBIT, EBITDA is going to be calculated, earning before income, tax, depreciation and amortization. Okay, so earning before, so the sales amount and minus the operational expenses, so that amount is called as EBITDA. So on that I'm going to calculate the depreciation of any fixed assets. So then after that I'm going to get EBIT, that is earning before income tax. So then on that value I'm going to minus subtract the interest, then I'll be going to get the earning before tax, then I'll reduce the tax, then I'm going to get the net profit or earning after tax or profit after tax. Okay, so this is how the calculation is done. So this is a format of income statement. Okay, so then let's understand how the calculations will be done. So there is a purchase going to happen. So purchase, it has, so quantity, let me take Excel for this. Okay, so it is quantity, rate and total amount. So purchase, I'm going to make the purchase. So purchase, I'm going to buy 50. Okay, so let's consider it has books or anything. Okay, so I'm talking about books, so I'm going to buy 50 books. Okay, at the rate of 100 rupees, so the total amount will be, so 50 into 100, that is 5000. Now then I'm going to make a sales. So sales, I'm going to sell 30 books at the rate of 200. So my sales will be 30 into 200, 6000 rupees. So overall how much profit I'm going to get? So the revenue will be, revenue will be 6000. 6000 profit I'm going to get. So how am I going to calculate the cost of goods sold? That is COGS. Okay, so do you people, anybody have the idea how the COGS is calculated? So here, cost of goods sold, how it is calculated means the number of books sold. Okay. So I'm going to take the value of sales. I have sold 30 books. So I'm going to take 30 books. And what is the amount that I have incurred in order to buy this 30 books? It is 100. So I have paid 100 rupees per book. Okay. So in this, if I am selling 30 books means, so for that 30 books, how much amount I have incurred? So it will be 30 into 100. So 3000 rupees I have spent. Okay. So understood till here? So my gross profit will be equal 6000 minus 3000. My gross profit is 3000 rupees. Okay, so like this we are going to calculate a simple transaction. Okay, simple way how I have purchased, the amount that I have sold and total amount I have spent on purchase. Then I have made the sales, 30 books I have sold where the rate is 200 rupees. So the revenue what I have made out of sales is 6000. So COGS means cost of goods sold. So 30 books I have sold wherein I have bought each book for 100 rupees. So 3000 rupees I have spent, okay, in order to the books that I have sold. So gross profit, if you see revenue minus COGS, I'm going to get the gross profit. So this is example 1. So let's consider example 2. So now here I'm going to make the purchase. So purchase, first time I'm making the purchase. So this is purchase 1 I'll give. Okay. So purchase 1, 50 books I have bought. So I am spending 100 rupees per book. So the total amount will be 50 into 100. Okay. Then again I am making one more purchase. That will be purchase 2. Okay. So this time I am buying 30 books at the rate of 150. So now this time I am spending is 30 into 150, 4,500 rupees I have spent. Okay. So overall I have spent 9,500 rupees. Now I'm making the sales. So sales, I'm going to sell 40 books at the rate of 250. Okay. So the revenue I'm going to make is 40 into 250. So 10,000 rupees profit I'm going to make. So revenue will be here. It will be 10,000 rupees. Okay. So revenue here will be 10,000 rupees. Now, how am I going to calculate the COGS? Why? Because now when I'm making the purchase, there are two different things, two different amounts that I have paid. In the first purchase, I have paid 100 rupees per book. Okay. In the second purchase, I have paid 150 per book. So which amount I am going to consider in this? So overall, so 100 plus 150, it is 250. So I am going to divide it, 250 divided by 2, so 125. So I'm going to take the average value. Okay. So I'm making the sales of 40 books. So now what is the cost that I'm going to consider to calculate my COGS means? So it is 100 plus 150. I'm going to get 250. So I'm going to divide 250 divided by 2. So I'm getting the average of 120, 125. So here I'll consider 125. So now overall the amount that I have spent for COGS is 5,000 rupees. Okay. So this is my gross profit. So gross profit will be 5,000 rupees. Okay. So now on this, let's continue further and we will just finish it. Operating expenses, OPEX. Okay. So OPEX, let's consider I am spending 2,000 rupees. Okay. So on this, I have to calculate EBITDA, EBITDA. So that will be equals 5,000 minus operating expenses. So I'm going to make the marking. So EBITDA. So now next will be depreciation. So random values I am taking in order to for you to understand. So depreciation I will tell 100. So EBIT will be 3,000 minus 100 will be EBIT. Next, interest. So interest paid. So I'm going to pay the interest. So that will be randomly I'm taking the value. It is 300. So I can tell it has EBT or net profit. So EBT or net profit. So that will be equals 2,900 minus 300. So EBT will be 2,600. Now income tax. So income tax, I'm going to pay it at 20%. So that will be equals 2600 into 20%. That is 520. Okay. So now EAT, earning after tax. So after all the deductions, what is my earning that is left? So it will be equals 2600 minus 520. So 2080. So that is my earning after tax. Okay. So understood with this how generally the calculation will be done in an income statement. So this is to calculate your income statement. So this is to calculate your gross profit. Then once you are able to calculate your profit, and along with it, when I have to calculate the other things. Okay. So purchase I have made. So when there are two different values where you are making the purchase, then you have to take the average value to calculate your COGS. Okay, so here I have got this value by adding 100 and 150. 250 it came. Then I divided it by 2. So I got 125. So when there are two different values in purchase, I have to take the average value and make the calculation. So like this, we are going to calculate our income statement. So understood with this?
Yes, ma'am.
So next, let's go for balance sheet. So what is a balance sheet is? It is one of the financial statements which shows the summary of all assets and liabilities. It shows all the assets and liabilities. So are you people aware of what are assets and liabilities are?
Yes, ma'am.
So what it is? What are assets?
Assets are economic resources of the company, ma'am.
Yes, very good. So this is what we own. So what you own or what the business own. Liabilities means what you owe.
Something that a company owes to someone.
Yes. So what you owe. So are the business that owes to someone else. Okay. So here, if I have to talk about the formula, it will be total assets equals total liabilities plus owner's equity. Guys, non-accounting students, if you are getting any doubts, please tell. So total assets means total liabilities plus owner's equity. So balance sheet is going to show the present situation till date. So till today, whatever it is happening, income statement, it is a financial situation which shows of a particular financial Yeah. So when is a balance sheet prepared? Prepared at the end of the financial period to show the financial position of a company. Of a company. Okay. Understood, guys? And let's go for cash flow statement. So it is a statement which decides the financial situation of a company. This displays the actual balance of cash, which includes the inflow and outflow, which does not include, this doesn't include payables or receivables. So cash flow statement means it is a statement which decides the financial situation of a company. So this displays the balance, actual balance of cash flow, where which includes the inflow and outflow, but it doesn't includes the payables and receivable. Payable means the amount that I'm supposed to pay to the creditors, and receivable means the amount which I am supposed to receive from my customers. Okay, so this one, so in brief I have just explained you what are the income statements. So what is an financial statement is, which includes income statement, balance sheet and cash flow statement. Okay, so you can go through the notes whatever I have provided, so that it will be easy for you to get to know. Okay, for the non accounting students, so let's start up with our income statements. If we finish with that basic income statements, next class we can proceed with the other income statements and balance sheet, so that it will be having sufficient time to do with our case studies. I wanted you people to solve with this, so which you have downloaded. So once you are done with the revenue part, case 1, case 2, tell me. I will just show you how the calculation was done, and you can check for the answer. So let me show you the first one. So equals selling price into volume. So the first calculation is as simple as it is. Okay, just we have to multiply the selling price and the quantity sold. So I'm going to get the value over here. So the same way, second case study is also about the third one. So here I have to calculate equals selling price into quantity sold. Okay, and here to in order to calculate, so here they have given one calculation what I have to maintain. So that is, it is expected that price will increase by 20% and volume sold will increase by 30% from here to onwards. So here to onwards there is an increase in the sales selling price and the volume. So what I will do is equals, I'll take the selling price into how much they are telling it is getting increased, hiked by 20% plus 50 rupees. So I'll just come here and drag it. Next, volumes is equal to 100, and here they are telling the volume, the quantity is increased by 30%. 30% plus, sorry, I'll give it as 1 plus 30%. So why I have done the calculation like this means there are two ways how you can apply it. So quantity sold. So 100 into 100 plus 30%. So I'll come here. So here del equals 60 into 130. So the calculation is done. Understood? You want me to explain the third one once again? So the first case study is just a simple calculation where you are going to multiply the selling price into quantity sold. And here in the third case study, they are telling that there is an increase in the sale price and the volume by 20% and 30% from the second year onwards. If anybody did not understand, please tell. I will do the calculation once again and show. If you are done with revenue, try solving the other sheets. Go for COGS, how to calculate it. So here you need to calculate the answer for this. Case 1 and case 2. Guys, if you are done with COGS, try solving the other sheets. It is very simple calculations what it is given. Guys, hope you people are able to do it. Guys, able to solve it? Okay, I will wind up the session for today. I wanted you people to try with the other things. Okay. So till okay, till this. So next to the depreciation. So EBIT. So try solving till PAT. So we'll meet you next class. Okay. I wanted you people to try solving this. So on Wednesday, I'll start from here only. I'll solve all the things. Then you will understand how it is done. Then I will share the other income statements which we have to solve. Okay. Thank you guys. I'll wind up the session for today.